Hello, everyone. It is Saturday, May 7th, just in time for the weekly chart review on stocks. So let's get right into it, shall we? I left it off on NASDAQ when I finished the Forex charts for the week, just to kind of give you a brief update as to where it's at. It's looking pretty crap, I'll be honest. I think we're going to be headed to some new lows. I was optimistic earlier on last week, kind of end of the previous week. I am no longer optimistic. We had a very, very strong drop, not just on the NAS, but on the US 30, so the Dow Jones. This has been super painful as well. We're kind of hitting those barriers, those same zones, but it looks like we're rejecting from that same spot. If we zoom all the way here, we see where it is bouncing from. Okay, back from March of 2021. And these are some deep ass bounces. Okay, so we came down here back in February 24th. We hit some lows. Right now, we're not quite there yet. And it doesn't look like it wants to go much lower. Like you see that it made a low and then a higher low, and now a little bit higher and a little bit higher. So it's a good sign that it wants to start pulling up, but it's really struggling. Like even on the 4 hour, it just rejected off that 233 EMA and just tanked. Like I haven't seen the Dow Jones drop, and this is on a 4 hour. Geez, let's go on the daily. Man, that'll be even better. It basically went up and down 1,400 points. Like, that's bananas in one day. Like, we haven't seen drops like that, I think, ever. And if they did, they were short lived. 1,100 points last week. Right? Like, what is going on? What is going on, folks? Right? Look at this one. This gigantic doji right here, this green one. Up and down. Like, this one probably moved way more than what we had on Thursday and Friday of last week as far as it dropping. Like, look at this. It's 1,000 pips, but it's a doji, so that means it went up and down 1,000. That's 2,000 pips worth of movement. This one is actually less, but oh man, it's been rough. Every time you think it's like, oh, this is the bottom, let's jump in, let's invest, it just drops even harder. When we hit the bottom here, it's like, oh, it's looking good. One decent day and a very solid day, followed by an even worse day. Like it's kind of disheartening at times, But the one thing that you need to remember is when there's blood in the streets, that's when you buy, and everybody's bleeding. So just keep that in mind. If you jumped in as well, you're not the only one that is in bad positioning. But if it is at all possible, this is where you average down. Okay, once you do that, what ends up happening is that you kind of balance out your position from the highs to where it's currently at, and then your position lowers itself based on the amount of stocks you got at any certain type of price. So let's say, for example, you bought a stock for 300 and now it's at 250, but you're smart enough to be able to maybe double the investment that you have in there. So now you're averaged at 275, right? So not a bad way to go. And that's more of a mentality when you're doing more of a long-term hold like for several years, right? When it comes to swings, yeah, not fantastic. When it comes to day trading, yeah, you don't want to be playing that game. This is strictly a long-term strategy. You buy more positions as the stock goes lower when you've done your fundamental research and you believe in that stock, right? You believe in that company's financials, you trust the direction that they're headed, and it really comes down to due diligence. Okay, but let's move on and let's take a look at some stocks that have been dropping but have been actually resilient to deeper drops, right? So Apple, very good sign. Like right now we've hit lower points than we have on May 15th, but it is still higher overall, and it is rejecting that white EMA. This is looking to me like a very strong bottom to be able to snag good positions. All right. I'm not going to be doing the stop loss and whatever as before because for stocks personally, I like doing the long term swings. I guess that would be more appropriate. You know, holding them for several months rather than just a couple of weeks. And I'm not huge into holding them for years unless I truly like where the company's going. Like there's a few that I have, but I'm not going to share them with you. They're my little secret. All right, white EMA being bounced off of right here, very strong sign that Apple wants to climb. AMC, you know, we did our zones, we did our projections. It's like not going lower than March 15th, so it's kind of surprising actually for a meme stock, right? But we did the analysis before. Watch previous videos if you want to get into detail. AMD, one of the few that actually ended on a good note. You know, you can see my entire list is blood red except for maybe a couple positions. And the Chevron and eBay, well, an MGen, you know, so not an Apple, I guess, too. Not really tech stocks, but more retail and oil. All right, but AMD, you know, decent way to end off the week. It did go lower than the 15th lows, but you know, AMD has some good potential as well, so I wouldn't take them out of the park just yet. Amgen, strong, right? I mean, it's moving in the right direction. It resisted off that white EMA, so very strong pullback, and now it's hovering around that area. You know, good opportunity. Amazon is bleeding, right? Definitely lower than its March 15th low, so it was right here, and then now it's lower by $500 a share, I think a little bit more. So as far as Amazon is concerned, the smart thing to do will be see how deep it actually got before, right? I kind of did parallels as the drops. Oh, sorry, pardon me. As the drops happened before. But I think now we just got to look at percentages, right? So when we had our high right here and then we dropped down to our lowest point. All right, so that's 1,500. All right, so let's see. 9 divided by... So that dropped about 40% from its high. Well, actually, I guess I don't even need to do that. I get a 40% right there. That's a 40% drop from the high to where it's currently at right now. You know, people are making fun of Disney. This is worse. Yeah. Excuse me. Okay. We haven't seen a drop like that on Amazon, I think, ever. Like, yeah, show me, well, maybe right here where it was in its infancy back in 2000s. Let's see. Okay. How much was this drop? 95%? Oh my goodness. If anybody ever bought Amazon for $4.80, I mean, like, you guys are a champion. That is just crazy. Stock split. But it's all worked into the price, right? So it is what it is. But yeah, wow. Anyway, let's move on. 97%. Okay, so I guess it has happened in the past, but that's just nuts. All right, so high to low right there, 66%. High to low right here, 32%. Oh, here's going to be a good one. High to low there, 30%. There's going to be another decent drop, but it seems that they're waning a little bit, right? 32%. So when it looks like it does a correction, it's an average about 30%, 32% seems to be kind of it. So let's see how this one's going to be. High to low, 36%. High to low right here. It's probably around the 25 mark. Oh, what a guess. 25.5. All right, so let's see. This high to this low before it kind of came up, 20. So Here's a great example. It hasn't gotten below a 30 to 32% pullback for 6 years, 5, 6 years. And then what happens after the pullback, right? Like let's take a look. When was the steepest pullback that we've seen? I guess prior to 2018, right? Let's just take a look right there. 36, yeah. So that was the 36% one, right? So how long did it take to recover from its high to its high? Right, pretty close right there. Even if it was like down just a percent, a year. Okay, but it recovered. So it took a year to go from 2000 back up to around 2000. Okay, and then it pulled back a little bit more and then started climbing like crazy. Right, so what's the situation that might happen here, right? If we're down 40%, this is the smart chance to be able to grab a couple positions. And if you're telling me, oh, its earnings are bad, well, were they great here? It kept going up. Were they great here? Didn't really do much, right? They weren't great there, and that kind of went down, but not by this. So don't take into account how earnings are. Think of the company long term, right? It's been dropping hard. It's very interestingly enough, right? If we draw a horizontal line, look exactly where it's bouncing off here, where it's almost the same area of earnings back in April of 2020. Okay, so if we zoom in right here, this is the info that we get, right? Earnings happened and it spiked up higher even though earnings were not fantastic, right? So what surprise was down, but overall made higher revenue. So I guess it spiked and then the next day it tanked, right? So it left a gap of 105%, right? But look, from its high to its low, it basically lost 7.6% in one day, okay? 7.6% in one day. So let's see what the significance is right here where we were talking earnings, okay? Earnings came out, so it started right there, and the next day it opened 7.6%, right? From the close to the close, 7.6%. Imagine that. Next time it had its earnings right here, what happened? Right, so it kind of popped up one day. So where it closed from one day to where it closed the next day, 14%. That's pretty significant, you know. And that kind of steep drop does not really give me. Well, I mean that's pretty bad, right? So I went down 7% instead of an estimate eight, or went down $7 a share instead of a projected $8 in growth. But I think all of that, its numbers are a little bit skewed because they were probably expecting climbs in revenue like when a lot of retail was closed, right? As we know, at the beginning of the year, there's a lot of loosening of COVID restrictions and people finally calling it quits with the mandates. And very likely that kind of took a chunk out of Amazon's revenue because they weren't really the only supplier of goods left anymore. But again, do we expect Amazon to be disappearing anytime soon? Probably not. So this is a very smart chance to be able to snag up some extra shares. Even before stock split, I do believe that they're going to be doing one. I'm just not sure when. Like we know Google is coming up, Tesla will be happening as well, but they don't have a date set. Amazon is a strong possibility too. Activision, yeah, like I said before, I don't really see it changing much. BlackRock is lower, but again, too big to fail, right? BlackRock, Vanguard, and there's one other I forget. Berkshire Hathaway, look at that. They've broken through the pink, but the white seems to be the next test. So very resilient to drops as well. I would say still strong to pick. There's no gaps to fill. This is just one of the types of stocks that are going to be quite good to grab in the long term, right? So let's take a look during COVID. What was the drop? Let's see the percentage. Let's try again. 30% drop max. Excuse me. Okay. What do we see right now? 13. Almost 14, right? Let's say 14%. It's very likely that it might just hit that 15% mark or even 16. As you can see, the white EMA is really close to catching up over there. If it drops to 300 a share, that is a fantastic opportunity to be able to snag up some more because, as we know, Berkshire has a very, very strong recovery rate. Like, it mimics the Dow Jones in a way. Like, if we take a look at the Dow, right, where it was COVID time, it hit hard, right? So from this peak to the low, it went down 38%. What did we say Berkshire Hathaway was? 30%, correct? It was 30%. Let me just grab it back on there. Berkby. Okay. When COVID happened. Where am I going? Right here. Right? Yeah, okay. Why am I on the wrong time frame? Daily. Shoot. Sorry, everyone. All right, here we go. So 39% on the Dow Jones, right? So from high to low right here, 31%, right? So similar move, but it recovered a little quicker, right? You see the Dow, let's just get rid of that. So from its high right here, and the next time it kind of hit that area, it took from February to November, right? In order to kind of recover all the losses that the Dow Jones had from February to November. So we're looking at 10 months, right? December and January is all we're missing. So 10 months. Berkshire Hathaway, from its high to recover, February to November. Yeah, look at that, 10 months. Okay? So right now, it hasn't even dropped that hard. So very likely, I think it'll recover quicker than what it did during COVID. We know the blue chips on the Dow Jones were hit a lot harder than NASDAQ was. So very likely, this is going to recover a little quicker than NASDAQ. But anyway, off to Berkshire Hathaway. If it drops a little lower, like I was saying, I'm expecting kind of around this area to drop like either 15 or 16% overall, bounce off that white EMA and continue its climb. As you can see, the white EMA has been pretty popular. If it wasn't for, any sort of big spike, it held on to that white EMA pretty well, right? Like, it had a bit of a pullback, but this is almost insignificant in comparison. And every time it did cross that white EMA, it was short-lived, right? Judging from where we're at right now, if we do cross that white EMA, we might be looking for a drop even down to 280, right? The only reason why I say that is because a lot of the volume buildup is, right here. We have a large volume buildup down to 278. Now, if we extend this all the way to the climb, it's still there. That's the majority of the volume. Now, let's bring it all the way down to here. It's even lower, but we see the gigantic spike still over there. I would say that's the second highest out of that entire time frame for a year almost. Okay? So, the lowest I would see Berkshire Hathaway going is maybe 278, 280. I have a sneaking suspicion it's going to bounce off that 303, 304 mark. Could be as soon as next week, even if we're a little bit bullish on stocks and bearish on currency. But an overall drop, I think, of another $20 to $30 per share is entirely possible. CAT, not really much interest in that. Costco, had a peak of 600. It lost about 20%, 20%, 18%. Let's take a look. From its high to, come on. From its high to where it's currently at now, 18.5. That was close. Okay, still higher than what it was on February 24th. That's a good sign. Okay, and this is steadily climbing. Like, as you see, it's kind of rejecting off that white EMA now. The last time it even broke through was during peak COVID, right? So Costco, very strong climbing stock, as we see. Every time it's in the bullish run, it kind of crosses over that white or bearish run. So good position to be in, I suppose. Bouncing off that white EMA, and it hasn't ever grown that steep before. Chevron, that's a little bit bonkers, but it's following the path of oil. Disney, remember what I said? Amazon 40%, and everybody's laughing at Disney right now because it dropped. How much? 46%. Yeah, it is what it is, right? Make crap content. Nobody wants to watch your stuff anymore. However, as you saw, when it's compared to other stocks of a similar nature, it dropped just as hard, right? So, we compare, if we want to compare apples to apples, Disney, pretty crap. Didn't do so well. But look at Docusign, right? I understand that it's NASDAQ compared to New York Stock Exchange, but look, 77%. That is super painful. Okay? Very painful drop for Docusign. And they've basically came back down to their COVID levels. We had a lot of spike in their activity because that's what people preferred. That was the way to go for the last 2 years. But do we think that Docusign is going anywhere? I mean, they're still the preferred platform for getting official documents kind of taken care of, right? Real estate agents, lawyers, like it's the most convenient thing to do rather than ship pieces of paper across the country or state. So, opportunity arises. Do you think that it's going to drop to the 40s and the 50s? It's possible, but I don't think so. Let's see earnings by comparison. Okay, 213 million, and then standardized, look, minus 27 points per share. Sure, let's go here. 274, what was that one? I said 213. Let's pick a random one. 382. Let's pick a random one. 545. And the last one, 580. It doubled its earnings from a year before COVID, and it's almost at the same value. I'm just saying, it's potential that it's overvalued, but like I said, COVID revenue. Okay, so I guess this would be the best time to find out. 297,000. So that was as COVID happened, right? So because the report usually comes out 3 months after the earnings are actually done, right? So look at this. It nearly doubled what it was at here, and yet you lost look at this drop. Even this one, 545, that's nearly double. That was like 80% higher than what it was around those levels. And you're telling me that it's suddenly going to lose $100 a share in value? Just use the coconut, folks. Use the thing between your ears, that gray matter that helps you think. This is not going to be lived for very long, and this is in my opinion, a discount. Up to you. Dow, it's making higher highs, fantastic. EA, it's super choppy. I don't really feel like diving into this one. eBay, significantly harder pullbacks than we've seen on March 15th and 24th. So, yeah, this is kind of following suit with the rest of NASDAQ. Not a huge fan. EGLX, yeah. See, unfortunately, this is one of mine, and I hate this stock. I thought they were great, because I looked past just their small earning potential, and I knew where they could take the online gaming industry, but man, has this been a bust, especially over the last year. Facebook, same sort of idea, right? Anyway. Frontier Lithium, here's a good one. This is one that I regret selling too early because, You know, I saw the spike here, and then I did my research, and I got around April. I held it to June or July, and nothing really happened, right? I'm like, oh, I want a stock that's moving a little quicker. And then if I would have waited a little bit longer, I could have tripled my investment. Even if I got it around the 80, 90 cent mark. 319%. Right now it's 279% from that time. Yeah, that's nice. Excuse me. GME, went over that previously in past videos. Google's having a hard time. It's dropping much harder than before. But guys, again, it's one of the things, you know, manipulated based on earnings. Do we think Google's going anywhere? Show me another platform that can take its place. You know, at this rate right here, at 2,300 when we had a high of 3,000, let's see the drop. Okay. From its high to its low, 25%. It's actually on par with NASDAQ as how deep it's been going, right? So not the worst thing in the world. And yeah, this is probably one of the good times to be able to snag some shares, because when the split happens in July, this is going to grow. Goldman Sachs, you know, it's been going deeper and deeper. I still believe that it's going to recover, but let's see, what are we going to guess? 30%? Oh, 29.1, close. Home Depot, making me sad, but that's all right. How deep are you going to go? 31%. It's pretty rough too. Honeywell, oh, sorry, let's go back to Home Depot for a second though. Where do I see it bouncing? I mean, I was seeing it kind of hover around this yellow line. That's where I was expecting. I didn't predict it to go further down. However, we had our lows on February 24th on US 30, right, which was the Dow, and now we've hit a little bit higher zone. So right now, Home Depot is performing a little bit worse than the Dow itself, and not to mention its last few spikes in earnings, even though it did well. Yeah, so whatever. This is another stock, in my opinion, to buy at a discount. Like it's gonna do nothing but climb. Like look at the recovery here during COVID. Hit a peak, and then it recovered in 3 months, less than 3 months. Right? There was really no contest. People were still using a lot of their services and products, so they didn't really go anywhere. I think this is the true pullback. We'll be seeing a reversal coming up soon. If we do Fibonacci, we are in the golden zone right now. Right? So as deep, I think maybe 283 might be the deepest it goes, but I have a feeling we're going to be seeing a reversal sometime soon, even if Dow Jones doesn't agree. Honeywell, yeah, I guess it's reasonable. It's been bouncing around and recovered compared to the rest. HPQ, not a huge fan anymore. I mean, I know they're a good company. They're just kind of a subsidiary of another company, but it'll take a while for them to get to where they need to go. This one is more of a long-term play for me for several years. They're creating, what is it, a type of technology to be able to, man, I hope I get this right, to be able to extract silicon from its natural state, I think by skipping like 4 or 5 steps, right? So to be able to actually extract it faster than what's been happening now. So if they actually get their technology underway and sold, that kind of ends the microchip shortage, guys, because there's a shortage of materials, okay? These guys are creating the technology to solve that shortage. So yeah, it may be hovering around that 44-cent mark right here, but don't be surprised if you see it in the teens in the next few years. IBM, up and down, not really interested. Intel, lower and lower she goes. Intuit dropped even further. Man, this has been a painful hit as well. I think over 50%. No, 45%. Still a pretty significant drop. Johnson & Johnson, not really dropping. Merck, not really dropping. Microsoft, it's kind of hovering around its support zone, so that's a pretty strong buy to take, right? I mean, it dropped, I think, 20, 30 something percent. No, just 20. So that's actually higher than all of NASDAQ right now. It's pretty decent. Netflix, it's that uncle that you never want to invite back to Christmas parties, right? Netflix is down 75%. Yikes. It's not been a good year for them. 75% drop since October. Oof. Yeah, November actually. That's bad. Where do I see it going though? Let's see. What do we have of significance here? A little bit of a volume area of the 2017 run. To be honest, I didn't expect it to drop further than this, but this has been super painful for Netflix. Just crushed. And again, the surprising thing, look at earnings, right? Like, I understand they lost subscribers, but you know, when you compare it to COVID numbers right there, 5.6 compared to 7.8, like, you break your quarter by 25% higher earnings than you had here. Your share value goes up, and yet you lose $150 value in your stock in a day. Okay. Neo, they'll recover. I mean, they're trying to be a Tesla competitor, but let's face it, Tesla is unique. It's not just an electric vehicle company, and if you do your research, you'll understand that. If you think that all they do is make electric cars, then you know what? Battle with them with whoever you want. But they are what you call a what is it? What's the term? What's the term? You know, a disruptor. They are disruptive. They are going to be doing unique things in the industry that nobody would be able to compete with. Okay, and the reason I say that is, again, do your research. Once you do, you'll understand. Okay, but think of them more of a data company instead of a electric vehicle company, and it'll make sense. Right? I like doing the Fibonacci channel for this one. It showed a very strong rejection. Right now it's hovering around that yellow line. It's breaking through it, but not by much. Very strong possibility to kind of come back up to the 1100 mark before it starts dropping off again. But, you know, significantly different, like 866 compared to the low that we had in February of 700, and then in March 15th of 764. So comparatively, much better than the rest of the stocks in its nature. Let's see what the drop is in total to now. It's 30% lower, and it dropped as low as 43%. Okay, its last little recovery, it dropped from there to there, 25%. You know, it's definitely a quick moving stock, and I know a lot of these moves was because Elon sold off some shares, but what you need to understand is because he still had some buying power to purchase shares. I think, I don't want to say the wrong number, I'm just going to guess, I think it was $70 a share, so imagine selling it at 1,000 and buying your same shares back at 70, right? I mean, why not? That's how you buy Twitter. All right. Still, again, I'm very optimistic about Tesla long term. They have a lot of things coming out. You know, it's headed by a guy that thinks like 10 moves ahead. You know, if all you see is what they are right now, then you may as well just not invest in them and watch the opportunities pass you by. Visa is Visa. Whatever. Not really going to do much there. Walgreens, Walmart, you know, having a little bit of a pullbacks themselves, but still very strong overall. And Exxon climbing like a rocket, which is bouncing off that pink EMA. Good opportunities to snag, especially for options. Like, shoot, right? Now that we've hit this mark and we see oil going up, like, short-term options may not be such a bad idea. Look at where oil is going. It's starting to climb. It's not pulling back anytime soon on the daily. 3 steady days of upward momentum. That's going to be reflective of Exxon and Chevron. So that kind of concludes the stocks for the week. Like I said, kind of more long-term outlook. I don't do swings when it comes to these. I'd like to, but that just would require a lot of attention since there's thousands upon thousands of stocks to choose from. I just like to go for the major ones that have movement or potential. So, I mean, take that with what you like. Like I said before, there's a Discord channel called Freedom Traders. They do a great job analyzing moves in the short term and option plays. And yeah, if you're smart and you're able to grab your calls or your puts and figure out if it's the right moves for you, then yeah, great opportunity to make some short-term cash. Otherwise, if you're nervous and you just want to put your money in and watch it grow, think long-term, think anywhere between 3 to 5 years, and put in the company that you trust rather than just flipping a coin and hoping for the best. All right. So thanks again for tuning in, guys. Please like and subscribe, and I'll see you next week.